In today's interest rate markets, let's take a look at the 10-year note futures as they're realizing some selling pressure here for a fifth consecutive session. We are seeing them lower, and today's price action is pushing the contract, the September contract, to new contract lows today, as the September contract is becoming the most actively traded futures market now as we're moving through expiration week. Looking at that price level 114.12 in the September contract. And I think when you look at the driving factors today, the primary driving factor is the anticipation of the Fed announcement tomorrow. Inflation data continues to stay high, even with today's PPI reading coming in slightly under expectations, I should say. Nonetheless, still elevated from a historical perspective, and I think that the market is shifting its expectations moving forward as to how the Fed may move, now pricing in a very high probability of a 75 basis point increase tomorrow, and also increasing the probability of further rate hikes down the road. So we're seeing that dynamic playing out in the yields today, in the futures markets. And when you look at the 10-year yield today, we are seeing it up 11 basis points day over day to 348 basis points currently. And the yield curve flattening. Now we are seeing inversion depending on the durations you're looking at. Yesterday, the 2-year, 10-year inverted briefly. It's actually got a little bit of positive yield to it today, about 3.5 basis points currently. But if you look at the 1-year Treasury markets today, we did see the yields jump up 25 basis points day over day to just over 300 basis points now on the 1-year. So seeing that yield curve shifting, the anticipation moving shorter towards the shorter end of the curve, with the anticipation that the Fed is going to be a little bit more aggressive, possibly starting tomorrow.